All right, guys, a very warm welcome to you all. It's 10 o'clock and 45 minutes in the evening on Monday, and let us spend some time in discussing the market outlook for 21st of December, Tuesday. I'm Devang Mehra, and I welcome you all to my YouTube channel. The holiday season is on, and this is a time when everyone celebrates. But for the markets, I believe this is one of those times that everyone is repenting and is under immense stress on when things will start to reverse. The big question is, when will things start to reverse, and what will be the factors that will help the market to reverse? So I have a lot of interesting things that I want to discuss today. I'll give you some macro pointers, I'll give you some technical pointers, and hopefully you will be able to do well in the coming days, and you'll be able to have a peace of mind in what to expect and what should you do in the coming days. Secondly, I have done an important video in the morning today, which is about the importance of December 21, December 22. So make sure you watch that. Thirdly, I have done a very important interaction with Anya organization about women empowerment in finance and the importance of asset allocation and the strategies that you can use to allocate assets at this point of time. So I'm going to leave a link in the description. Click that link and check out the entire video. It's a 50-minute clip, but just listen to all the things I talk about in how you can allocate assets, what you can do about insurance and SIPs and everything about all those things. I'm going to leave a link in the description. So let's start with the markets. Markets today did a fairly very interesting job. Who could have thought? Today I was expecting, if you ask me personally, I wasn't expecting the markets to open a big gap down, and even if they opened a big gap down, to get sold into. The idea or the plan that I was going forward with, that the markets will open gap down and they will get some kind of a recovery. But if you open the 5-minute charts of Nifty, these things become very important. The first 5-minute candle became a very big red candle, and once the 5-minute low started to break, that made it very clear that the markets did not want to come up, because if it wanted to come up, the 5-minute lows would not have broken. So this 5-minute rule is very important when the markets open gap up or gap down, to decide how further the market will proceed. Markets were progressing well, and they kept on going down and down. We thought that 1030s approximately will make an important low. It did give you a good 100-point jump on Nifty and about a 200-point jump, 300-point jump on Bank Nifty. But you again had the banks under selling pressure. You had the finance, you had everything going down. Tata Motors on 4%. I think Tata's still one of the biggest losers in the metals, and everything started to collapse. And eventually, luckily, markets made a good low around 1 o'clock, and the domestic institutions tried to combat the 3,500 crore selling that was done by the FIIs, and we did quite a good job. And I think we've closed at a good mark, relatively, of how the markets have been performing. So we have to understand, and I think I made a lot of things very clear, that as long as the FIIs, they keep on selling, the heavyweights would always be battered. HDFC Twins, Bajaj Finance, Tata Motors, the top steel names, because the dollar is strong. So all of these guys will keep on getting battered. The banks essentially were the ones that were around 4%, and more than 4% at one point of time. They were around 1,400 points, but they closed fairly well. So that is what happened today. I think one of the biggest falls that we've seen in this year. It was a replica, I would say, of last year, 21 December. I think last year the markets fell about 600 plus points, and today the markets fell, I think, around 520 points. So last year was drastic, and today was something again, a replica of what happened earlier. But let us see if history repeats itself. I've given you some plans, but one thing will remain. Before I move on and people start to go out of the video, I would like to make one thing clear. In the short term, you can be whatever you want to be in the long term. It's fine. You want to be bullish in the long term. If you want to be bullish for Jan, you be bullish for Jan. But in the short term, in the current expiries, the volatility will be there. So you'll see swings on the downside. You'll see swings on the upside. Your job is to try to be away from shorter expiries, especially if you're long. The shorts can still be okay because they're not decaying. The puts are not decaying. It's the calls that are decaying. So make sure, if you're in a call position, you book it out tomorrow of the current expiry. Even though if the market goes up 1,000 points, I don't care. You have to be safe. We might not have a next day or the next day in the markets tomorrow. So if you want to be in a bull position, you find something in January, but don't do it in the current expiries. So we saw the VIX go up about 15%, 16% today. It's around 18.9 today at the closing prices. That means that a lot of volatility can be expected going forward. I think it is very important for me to give some macro perspective. And I always believe in being a learner, in being a listener. So I sent you all a video today of Nilesh Shah, and I think he made a lot of very important points. So if you haven't listened to this video, let me give you some pointers, or if you have already, let me remind you again what he said, because I feel when the big authorities in our country speak so openly about the markets on big financial bulletins or channels, I think that is something one should always focus on. I'm not saying you follow what anyone says, but it should always dawn upon you of what the big guys are doing in this market, because let's not forget they are people who handle big chunks of money. So their mindset obviously plays an important role, and eventually they are the people holding the markets higher. If DIs were not there, I think the markets would be somewhere around 13,000, 14,000 levels for sure. So if you are in the tech, if you just here for the intraday view, swipe forward, but otherwise listen to me very carefully. So ET markets, they asked Nilesh Shah, they asked him about what was the reason, what's the reason why the markets are falling down. And if you ask me, I just couldn't understand why the markets keep on falling. Forget technicals for some time. You need some reason for the people to go short. And I've been saying it again and again. Omicron is hardly the reason. It's not something. If you think Omicron is the reason, I think we're deeply mistaken, and I've not never believed that. And today I think a lot of perspective had been given to me. So Nilesh Shah, he said there are three things which is causing the panic, or which is causing the profit booking in this market. And I think first one is the Omicron, partially because still in India you don't have any hospitalization, very serious ones. You don't have people in the ICU because of Omicron. And even I have my cousins and friends in London, and I think UK, etc., are the few countries that are flooded with Omicron, and everyone is on the streets. It's all chill, you can put it that way. So one of the reasons that he stated was that there is a divergence in how different schools of thoughts. Some people in the East have a different view, some people in the West have a different view. At the same time, the bigger authorities like WHO and US FDA, etc., they think it's too soon to call the shots on Omicron, whether the vaccines can deal with or etc. So this is one view that is giving way for caution in this market. Secondly, what's very important for us to note is the divergence in the valuations of emerging markets and India. So India and the emerging peers. So if you have been witnessing the fund inflows, you can see that every single month, barring the last 2 months, have been massive inflows in the Indian markets as compared to Korea, Thailand, Indonesia, etc. And if you look at the MSCI Emerging Market Index, you can see that India started off with the 8% weightage, but rushed off to a 12% weightage. So there was a very big gap between the peers and India. So that is one of the reasons that the FPI started to book profits, because of this valuation gap. So that is one more reason that could have triggered this, and why the FPIs are after India rigorously. Thirdly, if you all is inflation. I think inflation is the need of the hour to combat inflation, and I think all the central banks in the country, in the world, are looking after how we can sort out this demon, which is nothing but slow poison for all the market participants. And if you ask me, the fourth thing is, if you've been hearing about, if you all remember a couple of months back when you had the Chinese IT stocks tumble, if you all remember that, you had the Chinese education stocks, they tumble, because I think you had a law in China, or I think there was an enactment that was about to be passed, that all these educational institutions, they have to be a non-profit organization and they can't earn profit. And because of that, you saw huge outflows from China. So once that outflow started to happen, I think Hong Kong hit bear market territory around that period of time. So again, valuations gaps started to emerge. And now in the start of this month, especially, a lot of big investment banks, I think like Jeffries particularly, has been on this his agenda that long China, short India. So that's a very famous phrase that Nilesh also talked about, and it's something that Jeffries been after, because Jeffries feels that India is something which will not be very well versed with the tapering or the inflation, but China will very well survive it. So I think that could be another reason why the Indian markets are coming under pressure. So another question that he answered, two, three things I would like to add. I think adding the fundamental side of things is important because intraday view, there are thousands of channels. To be honest, on YouTube, there are thousands of channels. So bear with me. I hope, you will learn something new. You will learn some perspective of this market. So if you all noticed one thing, because I was noticing, if you all notice the dollar index has been going strong, right? That's the reason why metals have been hammered. That's why commodities are getting hammered. And PSU banks, remember this point, whenever things come under pressure, 2013 tapering, when 2013 taper tantrum happened, the PSU index of banks fell about 55%, if I'm not wrong. The reason for that is whenever the banks fall down, the PSUs take the biggest hit in when the market condition is not very good. The reason for that is because they are not so well capitalized. Yes, it's been improving, but as compared to the private bank index, they're not so well capitalized. So that is something you have to remember. When the market goes down or the Nifty bank goes down, it's very easy to make money by shorting the PSU banks. And when the market goes higher, it's very easy to make money by going long on the private banks. Finally, if you've been noticing, dollar's been going up fine, but have you seen the 10-year note yields? They haven't been going up. It is it's one very fine point that he discussed. And because see, these bond yields, if the inflation concern started to rise, the bond yield should have been around 2. So that to basically, it's one of the measures that shows that really reflects inflation. And if you look at the Indian yields of the bonds, you can see how they're already reflecting and how they're already being priced in. But one of the reasons why the bond yields hasn't gone up in America is, and what he said is that you could relate to that the members or the market participants, especially in America, they are expecting still the accommodative stance in America, in the sense that, yes, you are already expecting as per the Fed that you'll do a 3 rate hike. But if the Omicron virus is something of concern, American participants, they are expecting, that's what the bond yields tell us in America, because they haven't priced in the rate cut yet. And it's around 1.4, because if it was already priced, it would go to around 2 levels. So one of the reasons what he said was that they are expecting that the rate hike doesn't take place so soon, and it is going to go in a more accommodative or a more calibrated manner. And coming all barring all these things, and finally, when can the markets bounce, right? Technically, forget everything. 21st December or whatever that is, double bottoms. What could be the reasons that could hold the markets? What do you guys think? I would like to know your opinion. What do you think are the reasons in the future of how the markets can go up? So a couple of reasons that have been going around, or that he talked about particularly, and which I really enjoyed listening to, was number one, when the valuation gaps between emerging markets and Indian markets start to reduce. So currently you can see FPI is going short on India or booking profits in India. Eventually Indian market weightage in the MSCI will come down. They'll become fairly well priced. The other emerging markets, they'll go higher. So once you reach the borderline when the FPIs again get interested, that's one reason. Secondly, when the concerns, or when the you can say the how people think about Omicron, when these things get sorted out, because still Omicron is not such a crisis. I remember the fall in 2013. I don't know if you guys enjoy reading history, but 2013 was one of the biggest falls, I think, of this year. And in this time, the markets in Bank Nifty, it fell down 10-20%. If you don't remember, I know very, very clearly, I did a video at that point of time, will Bank Nifty go to 30,000 or 34,000 first? And I was right at that point of time. Go look at it on my TFA channel. It was a very interesting time, but this was one phase when Bank Nifty almost hit 20%, and below 20% is the start of bear territory. So that is what we've been talking about on the intraday commentary also, that if the markets go below 33,998, जो level मैंने आपको दिया है, which is a 18.75% GAN retracement, if this level breaks, then the markets will try to take a very, very strong support at the 20% mark, because below 20% mark from the all-time high is the start of a bear territory. So the markets will try their level best to protect these levels and not to break these levels. So ये दो supports हैं going forward in the charts. And thirdly, how the markets can take support is if markets are expecting good results. This quarter 3, they're expecting good results. The economy is doing very well. All the macroeconomic tools are doing very well in India, especially. And it is already expected that by FY23, Nifty will reach a EPS of 875. So if all goes as per plan, that is something that the market will enjoy And if the budget that's coming around the corner, if they start to talk pro growth, and as you've been noticing how the prime minister has been meeting a lot of important people in this country, so hopefully some productive measures come out, and things will start to sustain. So that was the macro view. Sorry to bore you guys. Let me know in the comments if you enjoy. So I will try to every single day include somewhat of a macro view of 5 minutes and then of a technical view, so that I can answer all your doubts that you have in your minds. Coming back to the charts, American markets not doing so well, which is expected, right? You had the entire global market not doing well, so it's expected the American market will follow as well. And they have come down quite some time, quite some bit, 16% higher on the VIX. And the first question is, let us see how they react. Let us see, do we see some sign of recovery at the end of the day? Because that will be a good sign. Coming back to the Indian markets, still there's no news that is dominating. It's just the FII selling going on. Two things that you have to remember. Either the FIIs, they will do a basket sell around 9 o'clock that you've been seeing in the morning, or they will come around 1:30 or 2 o'clock. You remember my words, right? Mug up 2 p.m. selling. So these are two times when the FIIs come to sell. They don't come in the middle, and they don't do any aggressive selling in the middle. So if you want to go short, these are two times. If you see some price action, you can choose these two times and go with the flow. Go with the big money. Be just one part. Be just slide with them is what I'm saying, and try not to be against the trend in the middle. So looking forward, one thing that I was talking about even yesterday is that if the markets are opening gap up or gap up, you will see some kind of a sideways movement. But it didn't open gap up. And the thing which is now happening is that the markets have fallen down quite a lot in a very small period of time. And if you look at the 13th of December, you were at 17,600 levels, and you've fallen more than 1,200 points in the last 5 sessions, which is massive, right? So whenever such big falls happen, you have to start to expect that a couple of volatile days or a couple of sideways days will start to emerge. It's a rule of thumb that if you want to be a reversal trade guy, you have to wear a double bottom. I think we've talked about that a lot of times. Double bottoms are required for reversals. So how can the markets play forward? So first of all, my suggestion to you now will be, let us say for some reason markets are opening gap down, right? Let us say the worst case scenario, forget these lines. I'm sorry, I can't remove them for now, but just let them be. Let us say the markets are opening gap down. Today, if it happens tomorrow, I will not be selling the gap down. Today was a different story. It took everyone by surprise. But I personally feel that if tomorrow becomes a gap down, people will try to book their shorts. Coming near the monthly expiry now, coming near the weekly expiry now, people will try to book shorts because markets have gone down very quickly, very swiftly in a short period of time. So on the intraday, I'm again saying intraday. I'm not saying I'm bullish for the next 100 years, but I'm saying intraday, if the market open gap down, then it's likely that they will not get sold into immediately, and some kind of pullback will be likely. That is something you have to keep in mind. Let us say the markets are opening flattish, right? Or not flattish, sorry, they open a little bit of a gap down, but above this 16,400 lows today. The strategy then is very simple. As I told you, as long as the market is in a trend, as long as the trend is there, as soon as these lows break, you can trade short. But because of the market continuously under selling pressure, you will reduce quantities. Now, that is the thing that you have to remember. If the market, because it can bounce anytime, that's what I'm saying, it can give a pullback anytime now. If the markets open flat, a little bit of a gap down above 16.4, and then they break 16.4, you can go short. There is no restriction because that will break the lows. SLO buys will get triggered, and then you can go short but reduce quantities. Thirdly, what if the markets are opening gap up or flat, which that will, I personally think that will create volatility. And I think in all these scenarios, essentially, I'm expecting some volatility to be created now, because if you look at, understand on the 15-minute chart, I think it will make more sense. If you look at the 15-minute chart, if let us say the markets are opening gap up over here, you can see that people who have gone short from this area, people have gone long from here. So the markets are trapped in some of the middle. So, you will not have a clear view of what the market participants want to do. So that is one thing that you have to keep in mind. Otherwise, the rest of the commentary I will put out on Telegram. But a gap up or the flattish opening will lead to volatility. Markets can come up, can come down. On the upper end, you have a lot of resistance levels. We have made it very clear we'll become aggressively bullish only now when the markets go above 17,200 or they give a double bottom on a bigger chart. Intraday double bottoms are good. So for example, now think about this scenario, because it's same of Nifty and Bank Nifty. Let us say the market opens somewhere gap up, so they will start to face pressure from this resistance over here. And so let's say it gets sold into, because FIs in the morning, they always place basket sell orders. So now if the market opens gap up, that can mean that the market will start to come down. So if you look at the markets, then it looks like a W is happening. Remember my rule for these W: if these lows break, then you continue with the trend. But what if these lows don't break? If these lows, let's say markets opened here, what if these lows don't break and the markets do well like that? That could be a very interesting signal that we need to look forward to, which will add conviction in the people who want to go long. So try to observe this pattern on a little bit of a bigger chart, 1 hour chart, 1 day chart if you can, and that will make a lot of sense. So expecting some kind of pullback tomorrow, expecting some volatility, not going to be an aggressive seller tomorrow. If you ask me, seller, I mean going short. If I do go short on price action, we will take small quantity. At the same time, we're not becoming aggressive bullish also. We have taken a 34,000 call of the January end, which we will hold aggressively till our current low has not broken of 33,988. That will remain. But forget about that trade for now and focus on the rest of the trading. That trade has to be forgotten till the SL is triggered. Look at the Bank Nifty chart. Bank Nifty has very, very same analysis. If it opens a very big gap down, expecting it to get bought into, look at the 5 minute charts, the rule I taught you today, try to use that. And if the markets open, gap up, they will try to create volatility. And I think in that case, look for double bottoms. I think I've been saying it every single day, every single hour now. Look for double bottoms, and they will help you, give you a reversal, and they will tell you when the markets want to become strong. So I think we had an electricity cut in my city. This is how the smaller cities are, guys. Sorry about that. So I hope things are clear. It's a signal for the markets to cut the video. Hope things made sense, and I will see you soon, guys. Cheers.